All right, guys, thanks for joining me today for today's webinar. I'm going to try and do these at some reasonable interval for the oil trading room. And the idea here is as a review of techniques and concepts for room members, but also for those who are not room members, to learn a little bit about what it is that we do in the oil trading room. Today's topic is a review of the charts, and I have about 6 things that I'd like to cover with you. And so we'll just go right into that. As always, past performance is not necessarily indicative of future results. There's a risk of loss trading futures, and so don't trade with money that you can't afford to be messing around with. I found over the years that if you trade that's just becomes a psychological trap for you. And so you'll find that your most productive trading is when you feel like you're a little kid just playing. And little kids don't think about money. And so it's a good place to be if you can find that little sweet spot. My name is Rob Mitchell. Today, you may see on the chat, my name is Mike Wilt. Mike ran the room today. And so his name is still on there and the software. And so I don't want to shut everything down and just to go change that. So when you see me speaking, it's going to come over, or chatting, if I do chat, it's going to come over as Mike Wilt, but, and I will open up the room for questions a little bit later on. If you do have questions, write them down or just be aware of what they are. I think most of you know who I am. I see a lot of familiar names in the room, and I have been trading for a long, long time in all different kinds of capacities as a commodity trading advisor, as a advisor in different ways. I've traded for hedge funds, and I've had the wonderful opportunity of being able to trade a lot of size in various markets. But most of my trading experience has been trading in the swing trading environment in day charts. And so over about the last 4 or 5 years, I've had a substantial focus in trading in the intraday time frames, and I've gotten pretty good at it. And so I began the room to find like-minded traders. And so I live in Carlsbad, California with my wife and 4 kids. And we have a couple of dogs now. That's Rusty out in front there. And we also have Koa. And we have a cat named Brutus. He's a Bengal. He's a big guy. And so getting right into the presentation here, if you have some questions and I don't get to them during the webinar, be sure to send me an email, or even better yet, it's often best just to ask in the trading room, because we can cover topics there when the market's not moving. Today was a good example of a market that's not moving, and we'll take a look at that in a little while. So what are we going to cover? We're going to cover today's trading room chart. The MegaBar chart is what we call it, and we're going to cover various related topics and techniques that relate to market structure that can substantiate your but there are many times actually you get a market. So this is a benefit of past trade and the other things. It might be that I'm just speaking a little bit too loud. Is that it, or? Okay. Hold on a second, guys. Okay, let's see if this works a little bit better. As I said, these techniques apply to all markets, but crude oil is really the king for learning to trade. If you can manage to do it, the volatility is high, and for that reason, there's lots of opportunity. Okay, I know what it is, guys. There's just some background noises that are causing my mic to cut out, so I think we have that problem solved. So you can accelerate your learning curve by trading in crude oil, and if you don't have the account for it, you can trade in the QM contracts, but we won't take that on as a discussion today. But QM contract is 2 to 1. So the things that I have to cover today are 30-minute bar ranges, understanding 30-minute bar ranges. Megabars are unique properties. The E2 pattern I want to cover, and color change patterns, and trend determination with 30-minute bars and key cycling concepts, bar violations, traps, and retags. And so if you understand these things that I'm about to cover, you really have a pretty solid handle on the room. And you don't have to be a genius in order to trade these things. But as you see, as I cover this whole thing, it's going to be pretty much comprehensive as to how you can look at the market in terms of the room and benefit from it. So each market has a basic structure that determines how to analyze. And some have a position cycle, crude hits, and that's a good thing. And so there are 7-minute sessions today. Yeah, I don't, unless I change my headset, guys, I don't know what to do. Let's try this. Yeah, let's see if that's a little bit better. It's a USB headset. All right, if it continues, I'll change my headset. So there are 11 30-minute periods during the pit session. And by analyzing these ranges and the patterns associated with them, we can identify opportunity. Most of these, the most basic of these patterns is just the range. So there are a couple of different ways that you can analyze ranges. You have averages, medians, and the variance or standard deviation. That is the amount of variance that you get around any given bar's length or range. And so one standard deviation covers approximately 68% of all cases. Two standard deviations is about 95. I never remember the exact numbers for those, but they're right in that general area. And so you can see the average range for the day session if you look at that range indicator over on the right-hand margin at the end of the day. It's about 56 ticks on there, the final register for that particular day. This happens to be for December 9th. And we'll also take a closer look at the ranges for today in a few minutes. So this tells you the basic amount of opportunity that you have in each period. And so the average is 56 ticks. And, you know, if you have, I like to just round that to about 50 in this particular market. The ES, for example, right now is about 4 points, or about $200 per 30-minute interval. And crude oil is about $500, is about 2.5 times what you can get in the ES. And that's actually fairly high for the ES. The ES can be a lot lower. When you add the fact that crude oil is a 10-tick structure, it makes the market easier to trade and to manage getting in and out of trades inside of these kinds of intervals. And so we'll take a look at 30-minute periods of the day. Now, what you want to see on this chart, what I've done here is I've created sessions. I happen to be using NinjaTrader here, but you could probably do this in a different platform if that's what you had. But each one of these is for one of those 11 periods of the day, and it starts at the top left and goes to the right, and then it picks up down at the bottom. So you have A, B, C, D, E, F, G on the top, H, I, J, and K on the bottom. Did I get that right? F to F on the top, G, H, I, J, K on the bottom. K is the final period of the day. We call it special K. And what you want to look at is you want to look at the plot, not the bars. You can see in special K that the average daily range for that period is 72 ticks. And the other periods run, like the A period runs about 57 ticks, 59 ticks for the B period, 52. Recently, the fourth period of the day, period D, has been running about 72 ticks. And these are based on 10-day averages. And so I like to just, when I'm trading, just think in terms of a 50-tick bar, and particularly in the early part of the day or the end part of the day, those are pretty reliable. Now, the second number that I have in that plot is the standard deviation. The standard deviation could cover 68% of all cases. And so you could subtract that or add it to the mean. For example, period K, you've got 72 ticks plus 27. That's 99 ticks or so. And today we had an example of the market moving that much during that period, actually more than that. Can everybody still hear me all right? I'm doing all right. I'm speaking more softly. I think I was just blowing out the level. Okay, thanks on that, guys. And so I just average these in my mind. When I trade, I don't want to be thinking in terms of a lot of specifics. This is a specific thing for this period or anything like that. I'm just thinking 50. Some are more, some are less. And so, yes, I'll speak softly. I have a tendency to get really loud when I speak publicly, and so it's hard for me to pull myself back. I was taught to project, and so that's a habit. So this kind of information can help you make key trading decisions that can help you to get caught in big trades. For example, if you're trading in a 30-minute bar that just reversed, you can expect approximately 50 ticks of movement, plus or minus that standard deviation. As mentioned, for some periods, this could be upward of 100 ticks or $1,000 in 30 minutes, but on average 50, so $500 on 11 periods a day, approximately. And so there's just a ton of opportunity in this market. Can you exploit every single one of those? Absolutely not. Well, I mean, if it's possible on some days. When you get a trend day, you could. But I'll discuss with you how you can align yourself with that. And there's usually 2, 3, 4 opportunities a day to catch those. And you don't get all 50 ticks of them because you don't get in right at the open or anything like that. But 35 ticks can be common. The same thing can be done for other markets, as mentioned. You've got about a 4-point structure in the ES, for example, about $200, but you often need about a $100 stop or a $50 stop. And so crude oil presents the opportunity quite nicely. This is non-directional. The statistic has nothing to do with the direction, and actually that is a very advanced topic. We call that skewing, the skewing of the distribution. And that's an advanced topic, but we're aware of various types of skewing on these statistics, but that's beyond the scope of our discussion today. So in order to manage risk better, we don't trade these 30-minute bars. We go down into a lower time frame, as it's often called. As Einstein said, you can never solve a problem on the level of a problem. And so you step it down a notch to refine and start looking for opportunity. And for this, we use Megabars that we're going to discuss. So Megabars are a bar that is restricted by range and that is controlled by order flow. That's really the entire description of the bar right there. It's restricted by range in that the bars themselves are 5 ticks tall, and on a reversal bar, they're 10 ticks tall. And so they're restricted by range, but they're controlled by order flow. And so there is a mechanism in place that will not allow one of these bars to complete unless the order flow is in agreement with the direction and movement in the bar. And so that translates into if buyers are overwhelming sellers, then the megabars can only complete going up. If sellers are overwhelming buyers, then megabars can only complete going down. Now, I came to a bar like this, the design of a bar like this. It's after a tremendous amount of experimentation and looking at delta and different order flow patterns that were occurring in the market. And one day I came to the conclusion that I could reduce all of that down to the bar itself and not be watching. This is a problem that traders get into. You're watching 27 things on your screen, your brain's in overload, and you're not trading when you're doing that. You're just getting caught up in analysis. Some people have called it analysis paralysis. And so the idea is to get the absolute minimum amount of information onto your screen that can tell you which way the market is likely to be going. And the megabars, that's exactly what they do. They reduce just tremendous amounts of mental effort down into a pattern. And then the background colors on these charts will also give us short-term trend information and also trend entry information. That is a template through Shark Indicators Bloodhound. Renko bars are not controlled by the order flow in the bar. So we're going to discuss, I'm going to go through these things as an overview, guys, and then we're going to go to a chart and we're actually going to start looking at some of these patterns. Megabars are only available in the trading room. An E2, a one-sentence description of an E2 pattern is look for bars in the same color as the previous bar and the same color as the background template and trade on the break of the previous bar. I will show examples of that as we go to a live chart, but this is the description for this. Basically, E2 stands for encompassing pattern number 2. And what you will see, actually you can see examples of these right on this chart here if I blow this up a little. For example, pattern right here. You see how this tail comes up and takes out the brick on this bar right here. When that breaks below, that's a sell. And that's with trend because the background is red. So if we go back and look at our description, look for bars the same color as the previous bar. Both of those bars are red. And the same color on the template. The background is red. And trade on a break of the previous bar. Now, sometimes that tail will go all the way up and take out 2 bars, and you can enter 2 bars back. I don't see any of those right offhand. There's another pattern called the Me2, the modified E2 pattern. That pattern is also an encompassing pattern, but that occurs on a reversal bar. A reversal bar occur at key pivots. And so if I blow this up a little bit again and we look at that, this is a reversal bar right here. You get a 50% retracement of that bar and it continues higher. That, of course, would be a counter trend trade, which some people in the room do, and use megabars specifically for entries on counter trend trades at key areas of support and resistance. We'll discuss some of that a little bit later. So let me read over that again. This pattern is an encompassing pattern that occurs on a reversal bar based on a 50% retracement and rebreak. and that occurs on a reversal bar. A reversal bar are 10 ticks tall, and so it's a 5-tick test into a 10-tick bar. Now, one of the triggers that we've been using in the room that is quite successful, also, because the E2 and the Me2 are entry techniques. The third one that I'd like to discuss is the color change patterns with trend. And the way that works, if I blow up this chart, and we'll look at some more of these as we go to today's. It's cycling up. You're cycling up, and you get change. In particular, if you get around the time, so market cycling comes down for you get a Me2 pattern off of the reversal bar on a green background and trend continuation. Like I said, the whole room gets reduced down to a simple pattern like that, and you're not looking at a ton of indicators trying to figure out what's going on. Everything's just reduced to a color and a trend, and I'll go over a couple of different ways of analyzing these trends and refining these things. But that's the basic type of entry that you might get in the room. So you could trade off of the color change itself. For example, you could have elected to enter on this green color change right here and gone with trend there. Or you could have waited for this retracement and caught the Me2 up in here. That's just an example. So we'll see some of these from today's actual chart in a little bit. So I want to define a couple of more things, trend definitions. One is cycling. We've already talked about this a little bit. On this particular chart, you get this pattern. You get A, B, C, D. You have a little inside pattern here, so I'll skip that. E, F, G, H, I. These are cycling patterns. And you can just do that right off of the bars themselves. Sometimes you'll get this double reversal. We call these railroad track patterns if the background color stays the same, but it's 2 reversal bars in a row. I'll call that a pivot. And so A, B, C, D. If it's inside, I'll skip it. E, F, G, H, I. Okay? And so that's just a cycling concept that we use in the room. That's one way of determining the trend. The other one is to use the trend line. You can simplify that by waiting for the trend line to change, but sometimes the cycling will turn before that, and you can be a little bit ahead of it if you're watching the cycling. But you can just watch the color of the trend line. If it's cyan or light blue, you look to trade to the long side. And if it's red, you look to trade to the short side. But depending on the market, it can get a little bit out of sync with things from time to time. And so it's good to know what's going on with the side. But if you're absolutely new to trading, the trend is a tool for watching that. A very day, you'll see the cycling and the line together. Another is for higher highs and higher lows. And so if you've got a 30-minute bar with a lower low and a lower high, then the 30-minute trend is down. Why do we want to know this? Well, a lot of big players are keying off of those 30-minute bars, and we're trading down inside of that. And so we are aware of what those patterns are. We're not necessarily trading off of them, but we're looking for opportunity within them. Another thing I want to cover is measured move extensions. A measured move extension is a simple way of making a prediction about what's about to happen next. So if I get this extension coming down on this chart, I'll draw a trend line along there, and then I'll bring it down to this pivot here, and I'll project it to this next level down here. And so AB is equal to CD. And then I'll do it again as this rolls over here. I'll say, well, I'm expecting this to roll down here. So a key concept with that type of a pattern is if I am at a point in this extension, for example, that the measured move has, say, 15 ticks remaining to that move, and I get an E2 type of a pattern, then I will be willing to trade that because I can get in to an E2 type of a pattern on about 7 ticks of risk. And if I think I can get more than 15 ticks of trade out of it, I'm willing to take that trade. The very best ones, of course, are the ones that happen early in the pattern that will happen first bar. That one, your risk reward is much better, and then you project your leg right here, and you extend that out, and you trade up into this region here. Another one is the period or interval extensions. And that is just looking at the same thing that we've already talked about. That is the 30-minute bars and how far you are into that. So if I'm in a period and I'm expecting a 50-tick range, and I'm currently at 35 ticks, and I think I can get into a trade at 7 ticks of risk, and I have 15 potential ticks remaining. As I said, it's better if you can get into them early. But if you're at 40 ticks in the current period and you've got a setup going on, you might want to wait until the next period. And so it's good to know always where you are in the measured move extension as well as in the period extension. Those two concepts can help you to have good trade placement. And then I'm going to go over some ideas having to do with the trend in a minute, the bigger trend, and whether or not you're in consolidation that can help you to really refine that, and so that you can get into areas where the market's really moving, where you can trade on these measured moves and these period extensions and get caught in huge trades with a high win percentage. Those are the very best. And so we'll cover that in a couple of minutes. So we combine these concepts with where you are in the period interval and the thickness. I'm going to talk about this. Let me see if I skipped that. Yeah, let me talk about the thickness. We're going to cover that on a 30-minute chart in a few minutes. We're going to look at how thick a profile is and use that as a trend determiner. I want to talk a little bit also about 30-minute bar violations. Some really good opportunity can occur around 30-minute bar violations, and that is where a 30-minute bar has been taken out from a previous period. Sometimes this will occur with the trend that's happening on your chart, and sometimes it will happen as a counter trend. Depends on what kind of day you have and how it's setting up. But we'll cover some of those things before going into the charts. I won't get into a ton of detail. I have a little more detail here than we need. And so I'm right to the Megabar chart from the room today. And I'm going to bring that up, and we will take a look at what we were looking at during the room today. But the first thing that I want to take a minute on is this 30-minute chart here and the bar overlap thing that I just promised you I would cover with you. There are, as mentioned, 11 30-minute periods. This is the first bar of the day. This is today's chart. And so what you had in period 1, or period A as we call it, you had a range extension of around 70 ticks going down. That's not entirely abnormal. I think it was about 75 ticks going down. And then we proceeded to have an inside bar, which told us that the market wasn't really extending. We came up and we tested this high over here, the period high in period 3. We tested that. And this is an example of a 30-minute violation. That's what I was just talking about. You have a test of this, and then you come back down through the close and through the high of this bar right here. And that tells you that you have a trend reversal type of a situation going on. At this point, you're looking back into the profile from the night session. And at any given point, I'm asking myself, how thick is the profile? And so if I'm on period 3 right here, if I'm at some point in period 3 right here, and I'm looking back, I have 1, 2, 3, 4 plus bars of thickness. So when I use the term thick in the room, I'd say the profile is thick here. What I'm referring to is that there's been a lot of trading activity that has happened at that level. Now, if I want to analyze this further, I look back 4 patterns here, but it tapers off right here, and I go to 3 thick right here. And so if we go into the MegaBar chart and we look at the price action that occurred right around below that point in period 3, or C, you're going to probably see a trading opportunity that occurred right around this period where you went 3 thick. By the time you get to the 5th period of the day, period E, you're now looking back into the whole day. You now have 4 bars as 2 hours of trading. And during this, pretty much this entire period, you were 4 thick during that, which told you that the market wasn't really going anywhere. And then you get a 30-minute bar violation, and the market trades itself back up and then back down. Another 30-minute bar violation comes back up. Another 30-minute bar violation right here. Trades back up, tests a little bit higher. This is a multiple 30-minute bar violation that occurred right here in period I, and this would create a trading situation because it's a trap to the upside. If you look at the way this whole thing is moving, it's a downtrending market. And so what happened was this came up, tagged this area, and rolled back over through the open, and in this period tested a little bit higher and rolled down. This is the best trading opportunity of the day right here. But very often these things will happen right after a 30-minute bar violation and a rollover. And so you look for the E2 patterns and the color change patterns after this occurs. Now, at this point, you're looking at this profile and you're saying, wow, I'm pretty thick going back. And so at this point, at any point above 48.56 is current place where my cursor is. If I'm in this period right here, the profile is 1, 2, 3, 4, 5, 6, 7, 8. It's 9 thick, and so very tough. You can really get chewed up in an area that's that thick. So what I'm looking for is the market to start breaking into a region where it's only 2 or 3 thick. Well, it's right along this level right here. And so the room's saying the market's thick right here, but it's more open, below a certain level or above a certain level. This is exactly what I'm referring to. I'm going back and I'm looking at the 4 low, and then I'm looking at what protrudes below that line. I'm going to adjust the line until I'm only 3 thick, and I'm going to start looking for trading opportunity below that 48.51 or at or near that 48.51. Sometimes the rollover will happen right just before that level, and so you have to stab at it. And we'll go into the chart and we'll take a look at that period, keeping this chart available. But that is the 30-minute bar thickness computation that I use in the room, and some of you had asked me to cover that in more detail. So let me just cover one more little thing here. As this broke up higher here, if I asked myself, how thick am I on the profile? Well, as I broke up higher here above this point, how thick am I? Well, I'm 1, 2, 3, 4, 5 thick. Is that a choice area to be buying? No, it's not, because the profile is too thick. If I had wanted to be looking for buys, I would have wanted to do it up in this region of the chart. I would have drawn to that level. I hope you guys can see what I mean here, above 49. Why above 49? Because when I draw a line through the bars of the day session, there are only 3 bars protruding above it. So if I can find some cycling right at or near or slightly above that 49 level, I would expect a trend continuation up above that level. Similarly, like I just said, if I see the market breaking below where I'm only 3 bars thick right here, I'm looking for trend continuation below that level. That's exactly what happened today. This happens all the time, and that is the trend lines don't want to participate with my little funny arrows, so we won't do that. Okay, so let's go to the Megabar chart and look at some of these patterns that happened during the day today. I'll probably jump around a little bit because I do want to leave some time for questions. But let's take a look at just what this day kind of looked like. As I said, we started the day with this period in A. I'm going to replace this chart. This in period A of about a 75 tick probe downward. And on the chart, you'll see that as the A period. That's right here. The market opened up at this blue line on the 30-minute basis, came up, did a little test higher, and rolled over. There's a couple of ways that you could have looked at this trade situation, but coming into the day session today, we were already very thick from the night session. And so the way that you'll also see that manifesting is that this trend line is going red, cyan, like this. It's just flat. And then you'll also see cycling trading action that's occurring inside of a range. And so this is the open of the day. The price action is inside of this range. And so you know to be very cautious in there because the profile is very thick when you see that. And so as this market breaks below here, you can try and get into the market on a E2 pattern like this that occurs right here. Oops, I drew the wrong arrow. Very often moves that start in the A period can be big moves, and they tend to occur pretty quickly. And so I personally did not trade that period today, but if you were looking for an opportunity to get into that, this could have been a good one. But the reason for that is because at this point, I have cycling that's going like this, and I come down and I take out that low by a couple of ticks, and then I get the E2 pattern. And so I'm looking for a continuation right there. That kind of a trade's a little higher risk, but as I had mentioned before, I'm expecting, just off the top of my head, 50 ticks in A, and so 50 ticks off that 48.99 open or that high. Just using it as a general idea is about 48.50, and so that's exactly where it goes down just below that. And so if I'm entering on this trade and I'm asking myself the following question, what is the market projecting to in this period? Well, it's projecting to 48.50. Well, where am I at? Well, my entry is 48.83. That's 33 ticks of potential movement on an entry like this. And so for that reason, this trade could very well be worth taking. I don't trade on the color change here because there's no cycling going on right there. But as it goes down into here, I'm getting the cycling because it's breaking to a new low. And I have a lower high over here. And so so that's taken those concepts together. Now, if I take the measured move concept that I shared with you, the way I do that, I just do it with a trend line. I just do it very simply. And so I'll just bring that over and attach it to right there. So what am I expecting that to go to? I'm expecting it to go to 48.72. That's enough. That's not enough for me to take the trade, and so I don't take it. And so I don't catch this. Some room members may have decided to take that trade on the basis that they expected a 50-tick expansion in this period for it to go down to 48.50 region. But I didn't take that trade. Now, when we came down here, and cycled higher here and then down here, and then we got this modified E2 that occurred right here. See where this tail comes up more than 50% of this bar, and so you would sell the low of this bar right here. Well, I'm at 48.50 right there, so I've done what I expect for the period. But on the measured move basis, I probably have enough room there to take the trade. And well, not in this particular case. I want to see at least 3 15 ticks. And so I won't take that one either. But if you were aggressive and you had just pocketed several $100s on this trade, you could very well take this E2 headed south right here. This one I definitely don't want to take. I'm well beyond what I expect for my extension in period A down here. And so I get an E2 that's firing into I get an E2 that's firing into a region where I don't really have expansion. So that's an extreme case of that. So then we come into B period. It opens at 48.34. I expect a 50 tick extension going up off of that, but it's a counter trend trade. I'm opening the period at the low. If I had opened the period at the high of the period, if B period had opened up in here, then I'd be wanting to look to go short. But because I got a really nice extension in period A, period B ends up being a counter trend period. Now it just so happens that at that point you were at that open right there, you were at the, if you watch market profile levels, you're at the value area low for the day. And so if you were an aggressive trader and you were inclined to counter trend trade, you would catch this modified E2 off of that low and you would get long at the high of the first bar in B. What do you expect from that? You expect 50 ticks. In fact, I did take this trade right here on that very basis because I see this over and over and over again every day. Not every day, but the first 30-minute period is unique because that's when the developing value area first comes on for the day. And so if you violate that and then you get an E2 type of a pattern off, and these trades are good. So what am I expecting out of that? 48.34. I'm expecting about 48.84 or so, and it goes all the way up to 94 on that pattern. So if you didn't take this and you missed this and you were just trading with trend, you have a cycling pattern here, and then you can look to get long on this railroad track pattern right here. This is another kind of an E2 pattern, or you could get on this E2 pattern for the extension to go up into the 48.84 level. And so, like I said before, just using the projection method that we had discussed, you could trade up into that if you had the room to do it. And so you come back down on C, and this is a case of what I said before. We finished B, or we finished A rather at the low and started B at the low. We came up on a pattern, so the trend is now up, and we start C in a retracement. And so what do we look for? Well, we look for the first color change following the time change with trend. And so you buy this bar right here. You could also decide to wait for an E2 type of a pattern following that. I've been doing that a lot lately, just E2s, and so I get a modified E2 right here with the 50% retracement on the tail, and you can enter on the high of this bar. Why is it safe to do that? Because I'm expecting 50 ticks in C. The low is 48.64, and so I'm figuring out about 49, 14 or something like that. Well, what's it go to? 49.18. Okay, so you hop on this trade and you ride it up into here. You can use the smart super trend levels to trail it up there if you want, or manage it however you want. But you're expecting that kind of an expansion at that time. Now at this point, we come back down into this range. We finish the C period actually at a low that has violated this previous low. And so this is a scale change when this happens. And so now for those who watch the profile levels, the profile was up in here at this time. And on that particular C period, the profile was up around the 49 even levels, right up in here. And so a person watching the value areas might have elected to take this E2 short. We have guys in the room that are very successful with this. And if you want to learn those kinds of techniques, those resources are available to you in the room. Selling the E2 pattern. Like I said, if you can get into these fairly close off of the pivot, you can enter those and still have some good room. So the beginning of D period actually is at a low again. And we don't, because this encompassed this whole region back here, we don't know what the trend is. And we're also in an area that's getting pretty thick on the profile at that point. And so D period, I stay away from. And I'm not sure that low I don't remember all the details of it, but I'm not sure that low actually that D low was actually tagging the value area low pretty much to the tick right here. And so if you're watching those levels again, you could have elected to trade this E2 going long. Right here. Oops, clicked the wrong one again. And these patterns just go on all day like this. This comes up, tags that. Remember I told you that value area was at around the 49 level. It rolls back over again here, comes back down and edge trades here. The kinds of patterns I like to find are, this is an example of a micro pattern, is that you get this ABCD, you've come up, but you get this ABCD coming down. This is 5 ticks lower right here, and then you get the encompassing pattern on that bar right there. These sell patterns I really like. And like I said, you just look for the expansion within the period, and you have to just weigh out what you're expecting for the expansion. Here you've got a failure of extension, but still during the D period, 53, 49, 04, it's 50 ticks right there. And so if you can get on to the idea that that D is headed up, you can trade that for 50 ticks. If you manage to get into it right here, you got 68. You got a good 30 ticks of potential on a trade like that. And so then you come back down. CD is greater than AB. I'm expecting a fairly deep retracement, and I come back up and I tag into these. I told you earlier I was going to tell you about retag levels. This is an E2 pattern right here and another E2 pattern right here, and so I'm trending like this, and the market comes back up right into these region of these E2s and rolls back over. That's a good short opportunity trade right there, just following the beginning of the E period. And then we come back down and we test this D low again. This is also around the value area, and you can try to trade it back up. This is very difficult to trade. The profile's very thick right here. I sat on the sidelines. The range is just too small to try and get anything, and you don't get any follow through on your continuations. But the thing that saves you from that is that the thickness of that profile that we had been covering during the say F period, A, B, C, D, E, F. I'm looking back. How thick is the profile? 1, 2, 3, 4, 5 thick. Okay, where does it thin out? Well, it doesn't. I'd have to get down below. I'd have to get down below 5 to be 3 thick. I'd have to get down below 48, 49 to be 3 thick. And what does it do when it gets there is they buy it up and it just chops again. And so if you get into trouble doing that a few times, you know what's going on. And then you wait for something like what happened today. This is an absolutely beautiful situation that happened that I had already alluded to earlier, was that we came up here and we broke higher, getting an A, B, C, D type of a pattern up inside of all this chop. This really difficult, choppy situation. Came up and took out multiple 30-minute bar highs, 30-minute bar violations. That occurred right here. As I said, the profile was still 5 or 6 thick over in here where this broke out to a high, and we knew that you'd want to be looking for longs around the 48, or shorts rather, around the 48.50 level. And so what happens is, as you get down into that 48.50 level, right around in here, you've gotten 1, 2 E2 type patterns in a row. I got one right here. If I missed that and I said, you know, I'm picking up another E2 pattern, and I actually sold this right here at 54. And so I'm actually in above that 48, 49, 48.50 level where the profile thins out, because when I get E2s, I know that I also call this E2, call it a very dumb money indicator. thing. And it's actually their stop orders that are going to fuel this move going south. And so we were able in the room today to project that move down. I forget what we were keying off of on that, guys. But I traded that down into 48. Actually, there was a low from a couple of days ago at yeah, I forgot what that was, but we had targets. We were throwing around several targets at that time, and this projected right down into the daily target level that I had posted, which was at about 47.70 or so. Oh, that's what it is. It's the IBP 1.5 level. It actually came down and tagged that right to the tick at 47.80. We actually know in the room that there was an 81% probability of hitting that target at 47.80. And so once the market starts moving in that direction, you pretty much know it's going there. And so I traded down into here, and that trade made my day. And then the K period traded up a grand whopping 119 ticks after doing that tag. Now, what was interesting about that I really realized afterwards was that K period missed taking out a low from a few days ago by 1 or 2 ticks. And so those who were astute that was going on would have caught some of these ETs north. Sometimes I get caught in a trade like down, and I'm so exhilarated that I can't really shift directions and go long. My brain just won't do it. And so, but if you're more malleable in the way you think and approach things, you can be successful trading suddenly going in an opposing direction. Just for my own personality, I'm not that good at doing it. So, okay, so back to the presentation. That's really what I wanted to share with you today, some of these techniques. I realize some of this might be a little bit head-spinning stuff, but they're really pretty simple techniques once you get your head around them. And so I'd like to open it up for questions. I know many of you have been keying in some questions while I've been discussing this, but I can't look at the charts and read all that at the same time. And it looks like there are many pages of notes here. And so I'm going to open up the room for some discussion. We've got about 5 minutes left. I'll let it go 5 minutes over today, but then we'll have to wrap it up. And so let me stop screen sharing for a minute. I'm going to go back and change it so that everybody can see the chat there. And so if you have questions, please put them in there for me. I took only a couple of trades. I'll tell you the one that I took. Different guys in the room will trade differently, and you can kind of follow them. They'll say what they're doing, and you'll actually learn their techniques. You'll know, I'd be looking at a chart and I'll go, yeah, I know, Ned's probably shorting in here, Mike's probably doing this. And so you learn the different guys in the room who really know what they're doing. No, Andy, on the E2, you enter on a stop. And so what I do is I identify that low, and like if it's an E2 on a reversal bar, what I'm looking for is that 50% retracement, and then I look at the low of the bar. Now in the room, it will print the close of the last bar in purple up here. And so you know what that level is. I add a tick and I place my stop order. And then if it fails, I'll cancel it, or if I change my mind, I'll cancel it. Sometimes you can watch it go through it, and I'll actually get in a few ticks better by placing the order when it comes back through it, if I feel strongly about the trade. Okay, market open to pit session. I don't really want to say, Carl, how much you could expect to gain, but I will tell you this. If you're patient and you wait for these opportunities where the profile goes to only 3 thick, you use the cycling concepts that I'm talking about, you should be able to do quite well. Actually, everything in this webinar is, and there's, guys, the oil trading room is really great because it can be very simple. You can just use simple concepts like the color change with trend at 30-minute bar changes. That could be your entire trading strategy. You will get caught in big trades. Stay out of thick profiles and trade those. Could be very simple. But you should be able, my goal would be to have a high, work towards a high win percentage and to get caught in trades that are at least 30 ticks or so. That's what I would be stabbing for. Use some of these extension concepts that I've talked about. And then as always, we cover these concepts in the room on an ongoing basis. No, actually, Seem, I set up this whole room so you didn't have to buy anything. That was one of my things. There's just nothing to buy. You just get in the room. The charts are very clear. We've used any meeting because there's absolute zero latency with any meeting. What you see on the chart is what we see on the chart, and so it's excellent. You can see those levels, you can keep off of them, and it works. Just membership to the room. Actually, if you were leasing the tools, if you were paying some kind of a lease for the tools that we use in the oil trading room, just those alone would be more than the room and the resources that are available. I just wrote down, I was just kind of brainstorming a little bit. I was just considering, what are some of the benefits of the room? Well, you have a support network, resources of successful traders, what they're thinking in their observations. Like I said, you learn the personalities of these traders and what they do. And part of the synergy of the oil trading room has been in the diversity of ideas that have come together through the traders that are in the room. It hasn't been, oh yeah, this is what Rob has to say. I've just allowed a completely open forum here. And because the approaches were so different, some really wonderful research work has come out of that, and the room's getting better all the time. We're working on some things that are just staggering. We've got trade setups in this room that are as high as 97% accurate. I'll call them out when I see them, and that's a little beyond our scope today. But next is an exposure to a wide range of trading concepts. I was kind of alluding to that a minute ago. Cutting edge research. We've got the best charts that's simple. You don't have a bunch. You notice there's not a bunch of indicators on these charts that are like, it's just really simple. Structured trading, because we trade with reference to these 30-minute bars and the patterns that are associated with them. Why is that good? Because traders with tons of money are trading on this 30-minute bar. And so we just try and trade inside of them. And so you have a lot of commercial trading activity occurring off of 30-minute bars. Improve your discipline. I actually found when I started the trading room, I was very hesitant because I'm a trader, but I was very hesitant when I started the trading room about starting it, that it was going to be a distraction for me. And I found that the room has provided a lot of structure for me. It's provided a structure for for new and profound research. It's provided more structure for my trading. And it also keeps me here during times that I never would have traded before I started the oil trading room. It's been very, very good. Orientation of getting caught in runner trades. We've talked about this. How do you get caught in a runner trade? Well, you try and get into trades near the beginning of 30-minute bars where the profile's thin and you have a potential for range expansion. And you just use the signals. Will you lose on some of them? You bet. Will you win on some of them? Yeah. And if you use these targeting concepts, you can get caught in 50 ticks trades. The biggest winning trade in the room ever is 144 ticks. But we have members in the room that frequently get caught in 100 tick trades. Not in the last 3 or 4 days or since the beginning of the year. It's just been kind of in a range. But anyways, the oil trading room still has some slots left for membership, and I'm discounting it. You can use you key it in at checkout, black gold 199 as the coupon code for checkout, and you get to that off of the homepage, oiltradingroom.com. Oiltradingroom.com. There's a little video there, and there's some links down below it, and you can try out the room and see if it works for you. And let me see if there are any questions. I got like a couple minutes left here. I will very often, Sam, put trades out in the room as I see them happening. Like, for example, that trade today in J period that went down that I told you that I got on. I had repetitively told the room about that. And at the time that that occurred, I pointed out the E2 pattern that was occurring. And so I'd had a short bias all day because we knew that that probe off of the A period kind of cemented the high for the day, even though it had been retested by a little bit and failed. And those are statistics that I haven't covered in today's discussion, but those are very profound statistics that we call the stretcher. We kind of know whether or not the high or low of the day is in place fairly early in the day with a fairly high degree of accuracy. And so there are plenty of, the trades aren't specifically called. I'm not going to say buy this at this on a stop because that's not what the room's about. The room's about learning to trade. You know, there's a saying, you know, you can give a man a fish, but you can teach him to fish, and it'll last a lifetime. So that's really what we're about in the trading room. Yeah, the room's open all 11 sessions each day, and actually we kind of open early, but it's an unofficial opening early. And Fitzroy, I'm not doing weekly trials, but I do allow people to get into the room on a Friday by special request so they can get a feel for the room. It's just too disruptive to have a bunch of people in the room who are not devoted to it. And so that's just what I found. We're a serious trading room, and we're geared towards learning and advancement. And so that's what I have. And so, yeah, so Fitzroy, if you wanted to do that, send me an email, support@oiltradingroom.com. I'll put that up. If you wanted to take a look tomorrow, you can do that and get a feel for what we're about. And so that's what I have for you guys. I hope some of these concepts that we had in the room that might have been a little confusing got clarified, but don't hesitate to ask in the room as these things are going on. But I like to have these sessions out of the main trading day, because a lot of times when I get in trades, I just I can't be as on top of it in the chat. And so I like to go over periods that are key decision point areas, like what I covered during today's session. And we'll try and do these about once a week or so. No guarantee, but approximately once a week or so, we'll get a webinar out there covering points that seem to be of value for room members. So that's what I have, guys. Thanks for joining me, and we look forward to seeing you in the room.
you have